Good afternoon, everybody. Welcome to the TraderMerlin show for your, Thursday afternoon. Hope you all did well out there today. Kind of a weird market, if you will ask me. I actually got out of all my put positions on limit orders early in the morning. Glad I did, because all of a sudden things rallied fairly strong into the close, and we'll talk about those markets and the topic du jour, which is the worst first half in 52 years. It's kind of hard to believe that it's been that long since we've had a first half of the markets that have been as dismal as they were this time. And I'm a little disappointed because, as you guys might remember, was it last year? I think it was 2020. I think it was maybe 2020. I had that monster 420 put position on the S&P, and the market rallied and stopped me out. And here I am having a much smaller position short. I'm just wishing I had that 420 put position for the month of June, which saw declines of double digits in some cases. So let's start there, and then I'll go into today's market. I want to run through the overall gist of what happened for the month of June, as I generally like to do a little recap. I'm going to start at the bottom, as I normally do, and work our way up. And yes, I guess I didn't give a shout out to everybody. Good morning. Howdy, everybody. I tend to get a pretty diverse group. We always get San Diego and Boston represented. Sometimes we get some pretty international groups as well. So cheers from somewhat sunny Southern California. Very hot and muggy, to be honest. All right, let's look at what happened out there for the month of June 2020. We start things off with one of the worst numbers that you'll probably ever see for an index, if you ever see an index like this. Bitcoin continues its woes. Again, I don't think it's done. I think we got a lot more selling to go. 10,000 is still my price target. We'll see if I'm right in another month or two. But down 41% for the month of June alone, and that's on the heels of some significant declines back in March and November, and I mean, it's just been ugly for Bitcoin going forward. Now, most of you probably don't trade Bitcoin, so that's okay. We'll move on to something else. Hey, Don, good to see you. We'll move up that ladder to that NASDAQ 100, which was down 9.05, and I'm going to do two things. I'm going to show you, I'll show you each one of these, and then we'll glance back, and I want to show the monthly performance at the end of all this, at least for volatility range perspective. So here is the NASDAQ 100 futures. You can see pretty much all down, although we are off the bottom, so we aren't closing at the dead low for the month of June, but all in all, a pretty ugly month out there for the NASDAQ 100 for the month of June. Now, if 10K is happening, I'm sticking to it. I hope it doesn't, because I have, I've got a lot of Bitcoin, but if it does, it does. It's okay. I'm not worried about it. My time horizon is much longer than just next week or next month or next year. All right, next on the list, moving up that from NASDAQ 100, which is down 9.05%. And the number you were seeing, I took off the futures from the last closing price from May to the closing price of June. That's what I'm measuring it from, because some of your numbers might differ just ever so slightly. Moving up, we got the S&P 500, which was just slightly better than the NASDAQ, down 8.56% for the month, with a very similar looking chart. As you can see, I guess I should probably stretch the screen and make it, there is pretty much just June. So we started off on the high note, really started to tank the first 2 weeks of June, and then maybe a little bit of a bounce back up here, but still an ugly month. At one point, we're down considerably more than 8% for the S&P. Now, next victim on our list was the Russell 2000, which I'll say was pretty much the same as the S&P. 8.55% was what its final numbers were. As you can see here, Russell, with these last 3 days of really aggressive sliding, giving back even more gains, continuing their losses and extending those losses. What do I have next on our list from our next victim over here? We should have crude oil. There it is. For some reason I thought it was higher, but there's crude oil down 7.65% for the month, and really a lot of that happening near the tail end. If you see here on our daily time frame, there's your daily. The last 2 days, real aggressive, and you see pretty much everything was selling off during that initial 2 weeks of June. Last 2 days really giving back a lot. If we go peak to trough for the last two trading sessions, almost an 8% slide for crude oil. Some of that may have to do with the OPEC meetings we've had. I didn't get a chance to dig into that, but pretty ugly couple of days here. And really for a lot of commodities continuing on, especially for anybody who is trading corn, which we may look at here in just a second. Now, next one on our list is going to be Dow Jones Industrial Average. We had 6.89% 6.89 for the Dow, which is normally the most calm one out there. Here's your Dow Jones Industrial Average, which has pretty much the exact same picture. You saw, a slow start at the top, kind of sideways, aggressive drop. We rallied with the hope of bouncing. I thought we'd bounce a little bit higher. No, lo and behold, we just kept drifting down here in the last 4 days of the month for the Dow. Now, the last one, and the best performer out there, I say the best kind of tongue-in-cheek because it was still down 2.66%, is gold. We'll take a peek at that chart right here, gold futures. The noteworthy thing for gold is I've had that yellow box drawn for a little while, and you can see we're right near the very bottom end of that range. So, one of two things is going to happen. We're either going to get a little bounce here, or we're going to see this thing do a little breakout trade and continue down. Now, I know some of you are probably looking over here off to the left and seeing these tails that happened on June 13th I got May on here. May 13th and 16th. Well, as we come back down to those levels, some people would include the tails. I'm actually going with the real bodies because of the way it opened and closed on these 2 days. So it's pretty much the same. Therefore, I'm discounting those tails. Of course, if we do break down below this 1800 mark, then logically the low point here would be that tail, which would be 1785 going back to May 16th. 2 days in a row of indecision candles on QQQ and SPY. Yeah. Well, it's always a little bit different when you take out the after hours trading. But yeah, you've got two small little indecision candles here. I really am surprised. I actually thought that we would see much more movement based off the GDP number and based off the core PCE price index number that we got. Now, I'll show you those numbers here in just a second. But we really didn't, in my opinion, didn't get much of a response to that. So let me finish with this piece and we'll go into the economic data. If you look here, the numbers look pretty gruesome, right? It's all negative. Of course, Bitcoin just off the charts at negative 41, ridiculous. But watch the monthly swings. So one of the things that I pay attention to is how volatile the markets are overall. And if you look here, you can see 41, most of them are pretty within the range. So for example, you can see oil. Oil was down, had a range from top to bottom of 21.82%. And finished down just 7.65. So we're still seeing really volatile swings. Surprisingly, the most calm here, gold, 4.44%. Total range for the month of June. That is fairly compressed range for any market, really. All right, so that is your run through of the top 7 markets out there. And I think that some of this may have had to do with the economic data that had come out. Who knows, maybe a little bit of pessimism out there. I saw a comment here. Good morning, Big Ed. Or good afternoon. William Thompson says, what about the ugly drop in numbers too? Like you said, the debt to GDP is third world territory. Yeah, it is kind of funny to think that the U.S. would be right up there with Lebanon and Libya and Sudan. Kind of blows my mind. And I guess it depends on what numbers we're looking at, right? If you look at the earnings numbers, like most companies have been beating earnings and handily. Here is the list of companies that reported earnings today. You had Micron Technology, Constellation Brands, Walgreens Boots Alliance, all of which beat earnings by a pretty good margin. Now, they were all down because the markets were down overall, so got that to pull them down. But for the most part, I'm seeing lots of positive numbers on earnings, but I do think that that's about to change given the numbers that we're seeing in economic data. So here's some of the economic data. As we pointed out yesterday, when I was looking at the core PCE price index, which is the most important number of the day right here, it was 0.3% was the previous month, and they had said it's going to remain the same. But you can see all of a sudden they raised it to 0.4. They raised that the last minute to 0.4%, and I said, now we're probably coming out 0.3. There we are at 0.3. Now, I don't think these numbers are going to change, meaning core PCE or CPI or PPI. I don't think they're going to change dramatically for another couple of months. I remember we talked about commodities a lot the other day, and I really do think that commodities are going to have a huge impact on the inflation numbers. And when you look at pretty much everything in that commodity space, almost everything is tanking and tanking hard. Take a peek at what happened out there to corn. I don't know if anybody was watching corn today. I was, because it was one of those things that just popped up on my radar. Notice here's your commodity list, right? Now, lumber had a great day, right? That was a rarity. Cotton had a positive day of 1.4%, but about time. I mean, it's been getting murdered. But look at things like wheat was down 4.3% today. Natural gas down 15% in a day. We've seen almost a 50% slide in natural gas in just 3 weeks. That is unbelievable. And then here is the corn future. Down 17.82% today. You can see the huge gap. What I don't understand, and maybe somebody here who's more versed in it, I like to think I'm well versed in these topics, but I'm looking at this. I don't see any lock limit down. And for corn to drop almost 18%, I really would expect there to be some lock limit down on this one. Joe says, any clues? I don't know. I don't know why soybean futures moved. Nor do I understand why corn moved. Right? It moved way more than I'm ever seen in a single day. And normally, if you move a certain percentage, it goes lock limit. So I'm not sure why corn didn't lock limit today. But I think the big piece for me is commodities are taking such a nosedive that without question, it's going to impact earnings. But that's going to be the next quarter's earnings, if that. But the inflation numbers, I think, are going to be the big pieces going forward. Here we go, Lori. Thank you, Lori. Hit that like button. Yeah, maybe I can go get a haircut. I didn't realize how bad my hair was today. I'm all over the place with this fro. All right, other economic data. It's certainly what I wanted to do. I was hoping I could have spent more time, but unfortunately not unfortunately, but I was teaching a crypto class this morning and had other production things to do, so I didn't get a chance to look at all the data like I'd like to. I would love to have done some kind of trend and compare and contrast of the different economic data that happened over the past quarter, or maybe even the past half, just to see the trends out there, but I just didn't get a chance. Most of the stuff for the U.S. has been stalling, if not getting slightly worse. Now, there was some really positive stuff today. I have an idea for a book which I really want to write. Of course, you guys know I already wrote one. I just haven't released it, and it's not quite finished yet. It'll be a white elephant, probably never get published. The second one I want to write is really about personal finance, and to me it's critical. And these two numbers that came out today I think are really important because we are a consumption economy. We're driven by buyers and sellers, and the buyers, it's critical they have money. If they don't have money, they can't buy, or they put themselves more in debt, and then we start a whole other cycle of just depression and problems. So the two numbers that came out today, you see personal income. So income basically stayed exactly where it's at. You got a 0.5% increase in income. Of course, I don't know if anybody here is seeing that. There you go. But spending also declined. They expected to go from 0.6 to 0.4, came out at 0.2. That is a very good recipe going forward because the more that people are saving, the better position they're going to put themselves in financially. However, if we don't spend, we don't grow as an economy. So this is a double-edged sword on that personal spending one. To me, this is great because, as I mentioned to all of you, I think right now is the time we should be saving. I think we should be saving up our money, not spending like we used to, because the writing is on the wall that this economy is most likely, not guaranteed, but most likely to continue to get a little bit worse until it finally gets better. And I don't know how long that's going to last. No proofreader for me? All right. I could probably do that. TradeStation says corn was down 4.67. Interesting. I've been watching this one, and it would make sense because you can't be down that much without having lock limits. Even things like natural gas. I mean, it blew my mind. Normally, if you have gaps like this or just dramatic moves, you're going to see horizontal dots, which would certainly be a lock limit down. And we've seen that a few times, but just not showing up on this one. There was lock limit down the other day on wheat. I don't know. They feel like they've removed the lock limit downs on the chart. That's usually very easy to see, like clear as day. Unfortunately, I'm not seeing those on these charts right now. So not sure why we're having discrepancies between TradeStation. I don't use TradeStation anymore. Regarding PCE, so much of the spending was via consumers dipping into savings and credit cards, so there may not be a great amount of disposable income. Correct. And this is, again, something that that I think was overlooked was the amount of consumer credit that's being used. We're at all-time highs with regards to consumer credit, which tells me that people don't have the normal income sitting in their bank accounts or just the reserves to pay for these new inflationary prices. And that, to me, is the really big problem because at some point that credit card is going to become due. Those credit card balances don't charge you 4 or 5%. They're charging you 15, 20, 25, 29%. And as that 10-year bond increases, those rates that credit card companies charge are pegged to that 10-year, and therefore you're going to see those rates rise as well. Fortunately, today was a down day for the 10-year. Congratulations, Lori, paying off that mortgage. Whoop, whoop. Did you have a party or something? You got to do something special for that kind of moment. Maybe a little less Netflix and a bit more making extra income. Modern problems require modern solutions. Yeah, you're right, Joe. There's so much talk about having a side gig and doing something else to generate income streams, or just setting yourself up to create income streams. It was kind of funny in the CIL this morning. We were looking at mining cryptocurrencies, and for the better part of 5 years, I've looked at mining cryptocurrencies here in Southern California quite a bit, and it made no sense. Under no situation would it make sense after you bought the equipment and paid for electricity and all that stuff. However, I ran the numbers today, and all of a sudden, it's showing some pretty significant potential income streams for me. So, hey, I'm going to do some research this weekend, and I may actually set up a little mining rig in my place to mine some Bitcoin through a liquidity or through a mining pool. And if I can pull in another $1,000 a month, great. To me, that's the goal. The goal should, for all of you, should not be, oh, I have X amount of dollars sitting in my accounts. The goal should be, have I set it up so that the money in my accounts or in these strategic locations can be bringing me in money. And let's say you need $8,000 a month as your all-out rate, meaning as soon as you get $8,000 a month, you can do anything you want. Well, if you set up your investments right and you find whether it's annuities or different income streams, rental property, whatever, where you can get $8,000 a month from that and not have to work, you've hit it, right? That you've achieved your goal. And so to me, that's what our goals all should be: is how do I set up those income streams? That's right, Eminem, Merlin the Miner. Hey, we'll see. Some of the numbers were like ridiculously attractive. I almost feel like I made a mistake, but I'm pretty sure I did not. Do you see an uptick in July, which seems to be a seasonal event? It's real. I'm really conflicted on that one, William. It's very tough because overall I'm pretty bearish on the markets. I just think that the amount of money we printed, the quantitative tightening that the Fed is doing, the amount of debt consumers are taking on with their credit cards, the housing market's starting to cool off. As soon as that starts to roll over, we see GDP numbers really start to slow down. If it really tanks and housing prices drop, then all of a sudden people will be balking on their mortgages. But I don't know if we're going to get there. The real key to getting this thing under control is inflation. Because if we can prove, I say we, like I'm some on the board of directors for the chairman of the Fed. If the Fed can get inflation under control, right? If they can reel in those numbers, then they have a logical argument. They can say, okay, we've got it under control. We can now start quantitative easing again and be buying these bonds again, lowering that yield curve, which would, of course, print more money. That would weaken the dollar. And all of a sudden, you could make the argument that they could stimulate the economy again. However, is inflation really under control? That's the question I have. I don't think so. I've like I said, I've run through a lot of these commodity charts, and it's pretty incredible looking at how much they've dropped over the past few months. It's just dumbfounding that we would see commodities fall that much, that quickly. Well, obviously, your cost of lumber is an inflationary component because it's what? It's going into houses, new construction, new homes. That's an impact. You look at things like, here's your soybean futures, right? Soybeans, obviously, food products. You have wheat. Everything's using wheat nowadays. You've got corn, which may be used for foods or for fuel. I mean, these drops are significant. So I really think, I don't know, I'm data dependent. I sound like Jerome Powell right now. I'm going to be data dependent. As I mentioned with you guys the other day, or yesterday, I think, it's hard for me to say long distance what's going to happen, right? Even next week or tomorrow is a challenge to say with high probability, like, this is what's definitely going to happen. We go in with an opinion and an idea, but the further I go out, the more arguments I could make for a bullish market and a bearish market. The shorter term, I'm still fairly bearish, even though I did close out my my options today. So liquidated all of that. I was pretty happy because the market rallied. I had limit orders. I'll just show you that. So I had S&P and NASDAQ puts. You can see the intraday action. I kind of felt really good about this. Let's go a 5-minute chart here. You can see market opens here 6:30 and just tanked. And I fortunately had a limit order out there which got filled in that one, and then it ripped up. And I was like, all right, great. And it started to fall again. I was like, oh, did I make the wrong choice? You can never go wrong taking a profit. So I'm kind of hoping that we get a little bit of a rally up so I can get back in short again. But exited my SPYs and exited my triple Qs this morning. So I'm pretty stoked on that one. Here's the triple Qs as well. Had that nice sell-off in the morning, got me out, and then rallied up. Didn't get the bottom, but that's okay as long as I'm out. What is causing the commodities to dip so much? Great question, Jill. I don't know. I don't know. I've been trying to figure that one out. With some commodities, I can understand that consumers of those commodities. So I used the example the other day of China, right? China, a major textile producer. We look at things like cotton. Okay, great. They can, if the price of cotton goes up too much in the U.S., they can simply try to buy it from another country that's a producer like Brazil. So let me see. Did I add cotton on here? I think I did. Yeah, there's cotton. So let's bring out the daily here. And you can see huge gap down and we're not an aggressive tank. That percentage decline, just the gap alone was a 17% gap, and we fell all the way down to a low of 36% slide for cotton. From a lot of things I was looking at, they were saying that because the dollar has rallied so much, remember this is priced in US dollars, what they were doing is they were actually going out and saying the cost is too much for us to, China was saying this, to buy from the U.S. is too expensive because we've seen the dollar rally. Here is your dollar. Right? Dollar's just getting more and more expensive, so their yuan is going to convert to fewer dollars, which means they can buy less cotton, and cotton was rising in price. So they just moved away from U.S. cotton. But does that mean that they moved away from all these other assets? They moved away from natural gas, they moved away from corn, they moved away from wheat? I mean, I don't know. I really don't know. I reached out to Don Dawson, but I have a feeling he's going to ghost me and not talk to me, so it was... it's okay. Hopefully I can get Don on the program in the future because he knows, I'll tell you, he knows everything about commodities. He will tell you exactly why this is happening and what the cause may be. Commodities are dropping because of demand slowing fears. Yeah, I think that's part of it. I think that certainly there's the concern that economy's going to be slowing down, so the consumption might be less. But this much less? I mean, this is a huge, just this one right here we see in wheat going back, 27 days, it's down 30%. All right, that's pretty substantial. So not exactly sure why that would be. But William, personally, I don't really see an uptick in July. I think right now the sentiment is pretty bearish. I mean, when you have the headlines that the media was spreading out there today, which I had to piggyback off of, which is this bad boy here, worst first half in 52 years. You go back to 1970. I mean, that's a long time. I wasn't born when we had a first half this bad. And I've been trading over half my life. Kind of crazy to see numbers that dismal. And, is it continue? I love how today I saw so many memes. There was really a funny one of Joe Biden taking a selfie, and behind him was a map of the market all red. And it's like, I caused this. I'm like, no, guys, pick on Jerome Powell. Pick on the Fed. All right? And they're the main causes of this. Certainly are both administrations, Democrat and Republican, over the past 20 years have had an impact on these markets to where we are today. What else? That was pretty much it. Anything else you want me to cover right here? Wheaties are off the menu. Yeah. Well, hey, Wheaties are getting cheaper. I never understood Wheaties. Can anybody explain to me Wheaties? You have a pressed particle of wheat that looks like a tiny little chip. And the second that thing hits water, it's like just inflates and you got a soggy bowl of mess. I don't get Wheaties. For the old people, welcome back, Carter. There you go. For the going back to the 1970s. Don't worry, Bill Gates will grow all the wheat in the... Yeah, I actually heard that he's one of the largest landholders in the world. Is Bill Gates? Kind of cool. Hey, good to see you, Doug. All right, well, you guys feel free to type in and chat with me on those topics if you want. Big Ep said I was tempted to close my puts today, but I think more pain is coming, especially with earnings coming. I think you're right. I think more downside. It's just the rate that we saw these markets change over the past week. Here, I'll just bring this one up. You've had these last 3 days of really aggressive move. It felt like we're due for a pullback, but I think you're probably in a safe spot to hold those. I just had a nice profit going, and I was going to, like to go into the weekend knowing I got a nice little chunk of change profit for the week and pays for my bar tab. 4th of July rally? Nah. I don't know. Just because it's a patriotic thing, everyone thinks, it's going to rally. However, I'm hearing a lot of talk about people saying on July, 2nd, 3rd, and 4th, I don't know the exact date, some of you might know, don't buy anything, like boycott anything as a statement to the elected officials, about maybe the lack of freedoms we have with which would happen with Roe versus Wade, etc. I don't know. Who knows what's going to happen out there? What I do know is since you have the day off, markets are going to be very volatile. So you tend to get a lot of market volatility because you have some of the bigger traders are on vacation. So liquidity is not there. So a normal size order may have a much bigger impact on the market that day. There you go. Yeah, Big Eb, I had the October one, so I went even further out. But I'll buy back in. I thought I would. So how much time we got? We're way early. So I got plenty of time here. Hopefully the maintenance people outside aren't too loud, and hopefully you can't hear that. No sprinklers for me. No sprinklers. Sparklers. So I had this question from Lee, and I thought I might share it with you. It would be fun if I could open it up and have you guys share yours with me. I'll read the question here. Lee said, what's the worst/best trade you ever made? This is an incredibly difficult thing for me. I don't really remember my great trades because to me, they don't really mean anything. I did what I was supposed to do. The ones that I can remember vividly are the bad ones, the ones where I lost huge. And I can maybe go through some of these. So the worst trades I ever made, there's really 3 that stand out significantly. Number 1 was that trade that I made in Cisco when I was living in Italy, when I traded an earnings announcement, and I just kept dollar cost averaging. Every time the market would tick up, I would buy another 1,000 shares of Cisco, and I lost about 15 grand in a day. That was probably the worst day trade I've ever been in. I guess as a swing trade, I would say that my options trade on Best Buy was probably the worst trade I ever made. That was a 6-figure loss. So that was over $100,000 on that one. And not that this was the worst trade. It was just one I learned the most from and I've shared this with you, having gone long a biotech stock, and I went short the biotech stock, and I got on an airplane and flew to Italy. And when I arrived in Italy, it had doubled in price, and I lost everything in that account. It's like, oh, well, actually almost everything. I had a couple bucks left. But that was one of the probably just most gut-wrenching ones because there was nothing you can do about it. As far as best trades, I can't think of any off the top of my head that I go, man, that was the greatest trade I've ever made. I've made a ton of them. I mean, I've had so many great just trades that you should be writing books about. But honestly, I don't think about that because if I have a good winning trade, I didn't do anything spectacular. I just did what I'm supposed to do. And in some cases, there's a nice sprinkling of luck on top of those trades, which turned it from a good trade, which I was planning for, into a colossally great trade. What was like an epic, just a monster epic one? I remember this is probably 20 years ago. God, I was teaching in Irvine for Online Trading Academy, and what was I doing? So that was 2006. And there was a company trading pre-market, and it was a very small cap stock that had a huge gap down, and I ended up buying several thousand shares of this thing, and within a period of an hour, had made like 10 grand, and I just put a couple $1,000s on the line. So that was probably one of the better ones in hindsight. But yeah, let's see. Gary says, "Hurts here. I can only imagine how." Yeah, it's good. I'm glad you say that, and I would encourage all of you to don't hide your bad trades. Really, I'm sure everybody wants to hear about you had the 6-figure trade. Yes, I've had 6-figure winning trades. Honestly, I can't really tell you what they were because I've done so many trades, and the only ones that stick with me are the ones that cost me money. Making it, and I say this all the time, and maybe it'll be a chapter in the book, that making money in trading is not the goal. That's not the goal. For most it is, and those people I feel tend to lose money. Trading is all about losing it, and if you don't lose it, then making money becomes a byproduct. You almost can do it by accident as long as you're not losing big. So focus on those losses. I really don't care about my winners. They take care of themselves, and if I have a great winner, awesome. Also, the other thing I encourage you to do, and this has been kind of one of my, I don't know what do you call it, but something that's really important to me is don't boast. I mean, if you have a killer day and you make $20,000 in a day, don't go out there and start telling everybody you made 20 grand today. Don't be bragging. Don't be boasting. Just shut up, right? And on the flip side of it, if you lost 20 grand today, tell people about it because you'll tell them about what you did wrong. You know what you did wrong, and that will make it so that you don't make those mistakes again going forward. So may not have been the answer you wanted, Lee. I know it was it almost sounded evasive, but when I've made tens and tens of thousands of trades since well, 1998 was when I like officially really started trading, and I was a little bit more active than I should have been. And yeah, actually 96 I was a swing trader, so it really wasn't that active. When I got into day trading, I was making more trades in a year than any one of you would make in a lifetime. That sounds arrogant and cocky. Remember, I was doing 550 trades a day. So you can imagine, give me a course of a year, I could probably with confidence say I've done more trades in 1999 than everybody in here combined in your entire trading career. I mean, that's how many trades I was making. It was just absolutely insane. Absolutely insane. I don't do that anymore, right? It's about managing my risk. It's about taking very calculated trades. I look at the style I had back in the late 90s, and it was like the frontline soldier just walking out there with his M16 shooting at anything that moves. Shooting anything that moves. Just don't care. Probably going to get taken out by somebody. Instead, as I gotten older, and I think that there's many of you that are in this category, you approach it as a sniper, right? I have to be very methodical about it. I have to have a strategy. I'm not going to pull that trigger until I know I've got the shot. And I know that if I miss on this shot, I could be spotted and taken out. So that's my strategy now, being much more selective in the things that I do, the trades I do take. Sometimes I'll get a little bit aggressive, but I'm nowhere near as aggressive as I was back in the late 90s. That was insane. All right, sorry, I was rambling. Went on a big rant there. Let's see. Most profitable, 6 figures, low 6 figures was my biggest one. I've actually, the white elephant that eludes me, which is what I was actually shooting for back in 2020, is the 7-figure trade. That's the one I have never had, and that's the one I really want. But someday I hope to get there. But remember, in order to have a 7-figure winner, you got to put some capital on the line. And you got to take some chances. And that's what, last year when I had those 420 puts, that if that market sold off, that would have been it. Same thing with the Best Buy trade from the 2013, I think. That was another one that I had a lot on the line. And it did exactly what I thought it was going to do just 1 month after I got out of my position. Let's see. Long calls on Zoom. When? Zoom. Wow. I'm having a little bit. They've changed their name to Zoomability. Let's see. They can tell by the price chart. Yeah? No, it's ZM. There you go. I was going to say that chart doesn't quite look the same. There we go. Yeah, when you have charts like this, if you're in the wrong position, you're in the wrong direction, and something that's either rising that quick as it did back in 2020 or tanking from 2021 on, these things just eviscerate your account. To me, you just got to be real careful with them. Ugh. Let's see, John. John says, Merlin, you say Powell is the reason the economy is where it is. It seems to me that JP is just too weak to stand up to the political pressure to make the right decisions. I don't know if that he's too weak. I wouldn't say he's too weak. There was an interview, which, where was that one? Oh, I think I moved it. Son of a biscuit. There was a really great piece of Jerome Powell at this World Economic Summit yesterday, or G7 maybe. And he basically says, we just didn't know about inflation. We had no idea this was coming. And then he says, we just didn't know what to deal with it. And I was like, are you kidding me? That's your job, right? So I don't know if he's too weak. I think, everybody points at the president for the problems that America has. And in some cases, they may be right, depending on what those decisions are. And again, this isn't a Biden thing or a Trump thing, Democrat, Republican, doesn't matter. Most of the times, I think Americans will quick to point the finger at the president, like he caused this. Well, if you look what the Fed did, again, they printed trillions and trillions of dollars to help the economy stay on track. So for the most part, most Americans would be happy as a pig in poop, loving it. I'm making money, you're sending me checks, economy looks good, and my job's doing fine, everything's getting better, my housing prices are soaring. It's hard to point the finger and be mad. But you know that that's a recipe for disaster, and that's Powell's fault. And I said this years ago. I said they will continue to do quantitative easing and continue to print money until it doesn't work. If you do something, I don't know, what's something you can get in trouble for? Let's say you found a code in the ATM machine, right? You go to the your Chase bank, and you found that every time if you double tap the enter key twice, it just spits out $100. I'm double tapping that thing and looking around. I'll take the $100 and see if I get caught. Come back tomorrow, double tap that enter key, get another $100, and keep doing that until something happens. You know it's wrong. You know it's going to have an impact. You're stealing money in that case, in that ATM example. At some point, they're going to look at the screens, they're going to figure it out, and they're going to bust you. Now, I look at the Fed, a similar situation. They had an inherently horrible marketplace. They had a market that was dying because of bad loans, mortgage-backed securities. It will go back. I'm going to talk about 2000, right? Sorry, 2008. In this period right here, this is horrible, and the Fed was going to do whatever they could to help prop that market up. So what they do, they're doing quantitative easing, round 1, round 2, round 3, Operation Twist, and they were just flooding the market with money. Okay, great. And what did it do? Bottomed out in 2009. Oh, started to steady. Things start to look good. Okay, we're back on track. Yeah, buddy, looking good. Right, in my opinion, right here, as we broke through those highs, they should have stopped all quantitative easing. They should never have bought another mortgage-backed securities, and they should have raised rates to get them back up to a normal level. Instead, they kept those rates at zero, pegged to the floor. That's the Fed's problem. The Fed kept the gas pedal on this market when they didn't need to, and we saw what? We saw this happen. Kept on going and going. This is Fed fuel. I mean, if you pour gasoline on your barbecue, you're going to have one massive flame. Your food's going to taste like crap, but you're going to have a huge fireball on that bad boy, and we're not done. Keep on going. I mean, this is all Fed created because they were continually printing money during this entire process. And then all of a sudden COVID hit and we increased even more. Right? I mean, if we look at this in a monthly chart, it's stunning what has happened. And all of this started with the Fed doing quantitative easing, buying bonds back here in 2008. They should have stopped here. Instead, they didn't. So yes, this is the Fed's problem. The Fed caused the housing bubble, the bond market bubble, the equity market bubble. If you say it was Trump or Obama or Bush or Biden, you're mistaken. They had a hand in some of the policies, but the big damage was the Fed, without question. It's more important question. Yep. More important question is not who to blame, but is who's going to get us out of this mess. Well, two things there. Who will do it, Merlin? I think that the natural flow of markets will do it. I'm more of a free market person. I believe that if we took out all the meddling from governments and central banks, that the free market would find its equilibrium. Just like supply and demand does for any item in life, you will find your equilibrium. And I disagree with you on one point there, Margaret, and that is that we shouldn't point the finger at who caused it. I think we should. Not to say you did this and bad boy and beat him up over it, but like, hey, your actions caused this. We can't have this happen again. So let's dig deep into what you did so we don't do that again, right? I'm not a parent, but I would imagine parenting is much the same way. You don't just beat your kid up because he did something wrong. You find out what they did, why they did it, and say, hey, here's why you don't do that. And you can't do that because X, Y, and Z. To me, if you just slap your kid and say don't do that, you're a bad parent. They need to know why that was a bad thing to do. So I think that there needs to be an overhaul of the Fed, a review of the Fed, an analysis of what happened over the past 13 years and say, okay, some of that was good, but we did it too long. And now the Fed is backpedaling going, oh, we didn't know. Bullshit. It's basic economics. It's basic economics 101. You get a finance degree. Again, they tell you print too much money, it leads to inflation. And for the better part of 6 years, I've been saying this with John O'Donnell is, where is the inflation? And all of a sudden, boom, hits us right square in the face. So here we are. Wealth creation followed by wealth destruction. The nature of markets. What goes up must come down. The ebb and the flow. High tide, low tide. I mean, it happens in almost everything in life. So the question is, where do we go from here? And I really don't have an answer. My gut tells me that we're going to see more pain and unwinding of these bad investments, small investments. Do we get back down to 32 on the S&P? Sure, I think so. Do we get all the way back down to these 2020 lows of let's call it 2,200? That's a stretch. That's a huge stretch to get there, but anything's plausible. It really depends on what that data starts to show us going forward. Because as I mentioned, if the Fed can prove that inflation is under control, those printing presses are coming right back on. They're going to fire that stuff up. I'm with you. Who pays the bill? You and I do. You know that. You and I know that. It's going to be us, the American people. And I would say it's also, I know we've got a bunch of Americans in here. I think it's also in your own domestic countries. If you look at what's been going on in Japan, the negative interest rates has been hurting that economy for quite some time. If you look at, I think actually the big shoe to drop here, the real big punch to the face is going to be what happens to the European Union. The ECB is keeping rates at zero. Every other country around the world saying inflation's an issue, let's raise rates to fight it. The ECB's gone, no, we're good. We'll just keep it at zero. Okay. The only one that hasn't raised would be Japan, right? Japan raised. Swiss National Bank was negative 75 basis points. They jumped to negative 25. So they've did 50 basis point increase after staying negative for so long. Abolish the Fed. Same people in the swamp. I think it's different people in the swamp, but it's the same swamp. It's the same muggy, dirty, disgusting swamp. Yeah, Jekyll Island. Gotta love the Fed. So, sorry, that was just one crazy, long, tangential rant about my best and worst trade ever. I don't know how we evolved into that, but that's the beauty of doing this show. I love the fact that we can just freeform and not have a regular set schedule. So, hope you guys enjoyed that, and I did like the feedback. What do you think today's PCE numbers? Soft landing, China reopening, companies with cash, and markets dropped a lot. Yeah, I'm still bearish, but I am looking at the inflation data. If we do... I don't think you're going to see it impact businesses for another probably 3 months, right? Because if we see corn prices fall, again, down 15% today, if corn prices fall 15%, that doesn't mean that, Kellogg's tomorrow is going to have just a huge earnings bump. They're still buying corn, right? They're going to be buying wheat, and these commodities have dropped. So what does that mean? That means that their costs are going to be getting cheaper for their products that they're selling. Now, the question I have is, if a box of Cheerios is, let's say, $5, and that's when, I don't know whether, are they corn or wheat? Whatever, let's say they're wheat, and a box of Cheerios is $5. If all of a sudden corn drops 30%, is my box of Cheerios going to drop $1.50? Drop, 30%? Probably not, right? They'll keep that box of cereal at $5. So what's interesting is how this all pans out. I think we'll still have the inflation numbers because the goods and services won't decline. But what will happen will be their earnings for the company that makes Cheerios or cereals will do really well because all of a sudden their profit's going to go up. They can sell at the same price when their costs were higher, but now their costs are significantly lower. Therefore, they'll make a lot more money. So it'll be really interesting to see what the earnings numbers come out for companies like Kellogg's or producers of foods that use corn, wheat, soybeans, etc. In the next, let's say 6 months. By the end of the year, I think we should start to see some of these commodity prices, if they stay the same, significantly impact, if they continue to drop or stay the same, significantly impact these businesses going forward. William, bourbon on Friday. Yep, tomorrow's a bourbon. Tomorrow's definitely bourbon. I may actually go get the Frey Ranch. Rob bought me a bottle of Frey Ranch bourbon, which is delicious, but the guy at the counter was like, dude, you have to get the rye because it's the best. So I may actually have a rye tomorrow, but it's definitely going to be whiskey day. Corn dogs 40%, and then we get our Wheaties back. Corn drops 40%, we get our Wheaties back. You can have your Wheaties, man. I don't want mush. Son of a biscuit, like you say. How can the markets be profitably traded given the present market environment? Well, that's the easy one. Look, trading these markets, I mean, this is the golden era for anybody who's an active trader. If you're a buy and hold investor, your bias should be to see this market drop, to continue. I mean, just look at the chart showing. This is a weekly. Yeah, we have this huge rally up. If you're looking on the weekly, you could argue that this might just be a pullback and we're about to get the next move up, just like we did back here in 2020. However, if you are a little bit intermediate trader, say in a couple weeks, couple months, we've got a downtrend, lower highs, lower lows, lower highs. So stay with that. If you're a day trader, who cares? Who cares? Look at your hourly chart. You got huge swings, nice big ebbs and flows. You got breakout trade right here that happened. Gorgeous breakout trade to the south side. You got double top patterns. There's so many great things here for active traders. I'm kind of disappointed that I'm doing all the teaching and content creation that I am because I can't sit in front of the screens all day and be making trades. I think that right now are probably some of the best days to be a trader, an active trader. There's so many great moves. So, how do you capitalize on it? Pay attention to what those markets are giving you. Right? The longer term stuff is a little more challenging. You just got to go with the bigger trends. But if you're short term, man, you're seeing huge volatility swing. I mean, Bitcoin 7% in a day. You've got crude oil 3, 4, 5% days. Same thing with gold and S&P. Tremendous opportunity. Big Eb says you won't see the labor rates drop. You don't think labor participation is going to drop? We'll see. Yeah, I don't know. We can all speculate on what it's going to be. I think I have an idea of what's going to happen, but I could be so wrong. And I'm going to have no ego in that fight. If I'm wrong, I'll just go, hey, damn, I was wrong about that one. Move on. I can't do it'll do me no good dwelling on the things that I did wrong. I just need to learn from them and see, was there something that I missed from a data perspective on how to make that better. Work with Mexico to take businesses from China and help with immigration supply chain. we'll see about that one going forward. All right, let me show you what's happening for tomorrow, and then I'm going to wrap things up here so I can go. And this is the bulk of my day is done, so I will be enjoying the remainder of the day. Here is your economic calendar for tomorrow. Now, most of the stuff that's important to me is down near the bottom there. You can see we've got construction spending. They're expecting that to increase, which should come as no surprise because it's summertime. This is where people are going to be starting to do work on their homes. That's normal. We'll see. I think the previous number, if I remember correctly, for construction spending was a big disappointment. Now, you are looking at ISM manufacturing prices. The expectations are that those prices are going to decline, which would be a deflationary component. Manufacturing PMIs also up top there. Looks like they're kind of staying the same for the final. And the Institute of Supply Management saying their Manufacturing Purchasing Managers Index going to drop a little bit. Still above 50 though. As far as other markets around the world go, you can see we've got some news coming out for the euro. You got the you can see at the top there we got a lot for euro. We have manufacturing numbers for Germany, for France, for Italy, and the entire EU. So that'll be a pretty big piece. If you've been following what's been going on with that euro lately, it's been really struggling, and really it looks like it's trying to break down below these lows right around 103.50. It just bounced 3 times off that level, lower highs, and a bigger downtrend. To me, this is dropping that, skipping that rock across the pond. Every time it seems to just not rise as much. Keep your eye on that 103.50 mark for the euro. If it breaks that, you could see some pretty big downside moves. It's also that double bottom, which we actually talked about a while back. And then finally, you've got British pound, GBP. They got mortgage approvals, net lending, so nothing that's huge impact there for the British pound, but it also has been in a really tough slide here recently. Here's your British pound. Still short the rallies until something changes in those markets. All right, what happened to the hour at the pros? Hard to understand. No U.S. marks. I don't know what happened to the hour at the pros. I don't think that they could. I don't think that they can use the word pros. Which is just a stupid thing. That's an FTC thing, and I think they call it hour at the expert or something. I don't know what. The FTC made so much stupid garbage rules. It kind of just blows my mind at the idiocracy that the FTC brought into the equation. So there's certain things we couldn't say anymore. And I think that hour at the pros had to be changed because the word pro they found offensive and implied that if you just did hour at the pros, you were going to make money. And I was like, no, it's a trader who does this for... Anyway, don't get me started on the FTC. They'll probably come after me for some frivolous thing. Let's see. I think that's it. All right, tomorrow, Friday, going to be a whiskey day. I might have 2 glasses of whiskey tomorrow. Yeah, I think it's gonna be one of those days. We'll see. I'm hoping that I can sell some options. I got some capital freed up, and I actually was hoping for either a nice market rally tomorrow or a nice market nosedive. Either way, I'd rather see that than just sitting sideways in another little spinning top doji. Give me some market movement tomorrow so I can deploy more capital into these markets and have some fun. That said, hope you enjoyed it. There is going to be no guest in the program tomorrow, so you can help me steer the show. Put your comments down below the YouTube video. Say, hey, let's talk about this, or let's talk about that. Let's talk about the other thing. Don't fall for the stupid scams that people are posting underneath the YouTube videos. I try to remove those right away. Now it's Hour with the Instructors. There you go. I knew they changed the name, Lori. It's really kind of a stupid reason why, but it is what it is. Fine. Let's just appease the FTC and move on. Yeah. I read in conversation, I believe that this entire FTC lawsuit was because something like 6 students had filed. And in my opinion, there's 2 individuals that spurred those 6 to say something so they could facilitate this whole thing. 6 out of like hundreds of thousands of students complained about the education, and most of it was because of the front-end sales. Strange stuff. Anyway, that's going to wrap it up for today. I will see you guys tomorrow again. If you have comments, questions, things you want me to talk about, make it your show. I'm just here to talk. I love to talk about markets. So if there's things you want me to go in depth on, you can put them down below the YouTube video or email at TraderMerlin@gmail.com. Until then, happy trading, everybody. Have a great Friday, and I'll see you tomorrow. Take care.